Let's take the discussion forward and toss it to Pankaj Pandey as well. He's joining us from ICICIdirect.com. Pankaj, let's begin with Titan itself. As my colleague was pointing out, it seems like there are headwinds in the second half of the year, not as many wedding days which are there, and perhaps the best is over. At least that's what Morgan Stanley is saying. Do you concur with the view?
Hi, good morning. Thanks for having me. One challenge with Titan is it's trading at about 57, 58 times FY25. So valuations are definitely expensive. Last 5 years, they have delivered 21% kind of a CAGR in top line. Our sense is that even with higher gold prices, the growth could be about 18 odd percent. And I think they're pouring into international markets also, while that may not really add too much in terms of numbers overall, but growth trajectory largely remains intact even with the higher gold prices. But like I said, the challenge always is with valuation. So we have target price of 3240. I think we'll sort of wait out for the results to sort of come by and then probably look at in terms of directionally where we would want to sort of take. But it's a big market of 4 lakh crores. They still have single digit kind of a market share. So from that perspective, I think structurally, there will be one of the few consumer oriented names which will continue to deliver high teen kind of a growth. I think valuation is the only sort of a challenge what we see going forward.
Okay, there you have it. But let's also get in your take then as to what the outlook is, Pankaj. Morning, firstly. When it comes to a whole host of these PSU banks as well, given the fact that we are seeing that catch-up play to some of the private sector peers, do you see now this sector holding a lot of promise?
Absolutely. I think so. PSU Bank is somewhere is one segment where we feel that things are looking up very well. I think most of your PSU banks, say for example, Bob or Indian Bank, they are inching closer towards 1% kind of ROA. Valuation is still sort of attractive at 0.8, zero point 0.9, and our sense is that with the kind of overall credit growth which is sort of panning out, credit cost is not expected to sort of inch up over the next 2 years. So possible, some bit of a re-rating is very much possible in these PSU banks. They've seen bit of a run-up. Our sense is that there's still a lot more juice left, and which is why our preference would be banks like, say, Bob or Indian Bank. But in general, PSU banks, we are liking a lot at this point in time.
Pankaj, what is it that you're making of Reliance, and as to how this entire, geo-financial services bit will play out, and whether or not it would actually lead to value unlocking for existing RIL shareholders?
So I think on Reliance, our target price is 2850. I think on the Reliance retail bit, we were sort of valuing at about 9.5 lakh crores on a 2-year forward basis. I think the current value is about 6.8, so a bit of a lower compared to what we were sensing. The private market was higher. I think on the geo financial services, at best, initially, we would look at one-time book. So beyond that, until and unless we don't get a set of plans into what it intends to do, I think we would not see a valuation inching up because of geo financial. So, but I think one crucial aspect what we need to sort of watch out for is that Reliance GRMs had been softer compared to some of the PSUs what we have seen. So our sense is that if they are able to sort of deliver GRMs, probably this near-term weakness might not sort of pan out, and stock could do well. We are already seeing this company being beneficiary of the electrolyzer or new segments, where I think they are looking to sort of play the entire spectrum. So triggers are there in place for the stock to do well. Valuation of Reliance Retail is a bit negative according to us.
And talking about triggers in place, that's not the case only for Reliance, but for Tata Motors as well, right? Pankaj, of course, we got that update on Friday, and they're talking about big targets when it comes to fund flows, as free cash flows, that is. And it seems like they're managing to do that. Plus, there are additional triggers, the likes of commodity prices easing, as well as Tata Tech IPO, which is lined up. Do you expect Tata Motors to continue this rally, because it's already at record high level?
Absolutely. I think it's been one of our top performers. Our target on Tata Motors is 700 rupees. Now, when you sort of look at JLR, volumes are 93,000. So I think it is better than what even the management had guided or even what we had taken at about 90,000 odd. And good part also is that on the domestic side, some of the laggard segment like CV, the volume growth was quite decent. And margin profile there is sort of improving for almost all the players. I mean, not only for Tata Motors, but even for Ashok Leyland or even for Eicher. So I think you're getting volume growth plus you're getting margin improvement. And I think given the fact that overall capex as a cycle is still looking quite good, so our sense is that Tata Motors will sort of continue to sort of do well. And along with, yes, obviously you have triggers in terms of Tata Technologies getting listed. So I think we continue to sort of like Tata Motors, and our sense is that 700 is on the horizon for this stock.
Pankaj, the week on by spelled a lot of action for the two-wheeler space as well, right? First, downfall in Eicher with regards to the new launch from, Bajaj stable, as well as the Hero Harley combine as well. Wanted to understand, how do you think things are going to move within the two-wheeler pack, and whether or not one should look at buying this dip in Eicher, or do you think Eicher's dominance in the two-wheeler market could get seriously challenged by Hero and Bajaj?
So on the two-wheeler front, we have seen Eicher correcting more than 10%, largely because there has been launches by both Bajaj as well as Hero MotoCorp. Our sense is that market is sort of looking at one direction in terms of higher competition, and that might impact volumes. But when we sort of look at a decade back, say 2013, the overall volumes in the 250 plus CC segment was about 1.22 odd, and that has sort of expanded now to closer to about 8 lakh units. So our sense is that while there has been near-term weakness of what is the market is sort of pricing in, but our sense is that going forward, it has got the potential to sort of expand this entire pie, and premium as the segment has been where we have been focusing more on, and which is why we have sort of continued to like Eicher Motor despite good valuation. So our sense is that this near-term weakness should be bought. I think it will lead to more of expansion of that segment rather than sort of shrinkage in terms of margins or overall growth being impacted. In Eicher Motor, we have a target price of 4165.
Okay, I wanted to also get in your take then, Pankaj, as to what the expectation is from heavyweight TCS as it kickstarts the earnings later this week.
So I think on the technology front, a good part is that we haven't seen much of a price performance. So overall, there is not much of an anticipation in terms of result, typically what we have seen earlier. So most of your tier one names are going to sort of deliver 0.5 to 1% kind of a dollar revenue growth, which again is not a very significant number. I think the commentary, especially outlook, is more important. But our sense is that Infosys looks attractive given the fact that overall it is trading below 10-year average. And if they're able to sort of deliver slight positive commentary or slight better set of numbers, I think that is one stock which can sort of do better compared to the rest of the pack within the tier one names in IT.
The valuations are so beaten down, and the street is already factoring the worst from Infosys. I guess there's only one way to go, and that's surprise positively, right? Pankaj, quickly, your take regarding some of the recent IPOs as well. Is there any name that you like? And as a retail investor, what are you advising if the stocks do open with a gain of 50 to 90%, 90% the case that we saw in IdeaForge last week, and 50% today, hopefully on Cyan DLM? Do you tell the investors to book profits?
So generally in IPOs, we have not been very sort of a big fan of IPOs, largely because valuations have been sort of rich and a lot of expectations are sort of riding. So typically, we would prefer companies who sort of get listed and probably a year or two down the line when things sort of normalize. When the expectation sort of normalizes. Which is why we have not been really chasing or have been advising investors sort of chase IPOs big time.
Not chasing IPOs at this time, but Pankaj, what about the entire life insurance space? And within life insurance, of course, we've got the latest monthly data, and they have reported the APE growth of anywhere between 10 to 17%. But the question to you is that HDFC Life from the lows has already run up a bit. Do you think now it could be the time of SBI Life to do the same?
So I think both HDFC Life and SBI Life are trading at about 2 times or 1.9 times on a EV basis. Now, for life insurance to sort of keep continuing to sort of keep performing, I think we need to see whether we are going to see a double-digit growth in the overall insurance premiums, and that is where we are still not very sure of in terms of growth, and which is why, despite the run-up, probably still not sort of looking to chase. But yes, SBI Life has been a relative outperformer in terms of insurance premium growth. And valuation wise, probably it can sort of is a bit lower compared to HDFC Life. So yes, it can tactically sort of outperform HDFC Life to some extent.